The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning. Happy Tuesday, everybody. I'm kind of getting used to some different light in here. I had to move my computer monitors around because of the change in the time. I hope everybody's getting used to it. Usually it takes me a couple days for it to really sink in. You'd think that 1 hour time difference wouldn't matter that much, but it does. And, okay, here's a little grammar nitpick I'll give you to start the show. Everybody says daylight savings time. There's no S on the end of that. It's daylight saving time, saving the daylight. But for some reason, it's kind of, I think it's just easier to say. It just kind of flows off the tongue better when you say daylight savings time. It's just kind of easier to say, and it's actually one of those phrases that when you say it correctly, it sounds wrong. Daylight saving time. That sounds wrong. Okay, so here we are at 11:08 or so a.m. daylight saving time. I've put up a chart on Tiger TV of the Russell 2000 ETF, the IWM, and seeing some upside action today, but you do notice, along with the NASDAQ, this one did show a decline when you had the NYSE indexes showing some gains in Monday's trade. And as we've talked about frequently on the show here, prior to that little rebound that we began last week when everybody, apparently the world heaved a giant sigh of relief about Greece. Okay, so everybody thinks that's all over with, at least for now. You always see the rumblings in the media about who's next: Ireland, Portugal, Spain. We shall see. But as we pointed out on the show in the past few weeks, you did see that decline in some of the smaller cap stocks prior to declines in the major indexes. So was this some kind of canary in the coal mine? Well, at that time it was. And right now we're trending higher again, along with everything else. So what we'll do on the show today, we have a great guest, an encore presentation by a small cap analyst and writer named Mark Courtney. And he will be joining us a little later on in the show. And he always has some terrific insights into some small cap stocks, what's going on in the market. Very interesting guest to talk to. So I wanted to bring him back just to talk a little bit about sector rotation and what's changed since we spoke with him last. Give a call today. Excuse me. I am at 877-927-6648. We can talk about small caps. And just a reminder to let you know, if you have not caught the show before, I tend to buy into strength. I don't like to track stocks that are trending lower and getting beaten down. I'm not looking for the biggest bargain. What I am looking for are stocks that are showing some signs of institutional buying, because historically, those are often the ones that do tend to go on and make the biggest gains. I know that it can be counterintuitive, but that's the kind of thing that I'm looking for here on the show, and I'll show you some examples of some of those. So we are kind of at earnings season has really wound down, and we've seen most of the bigger names have come in, have reported, and now we're in the oddball phase of earnings season. We're seeing a lot of the lesser known names, maybe smaller stocks, and maybe some names that are well known, but maybe are smaller companies reporting. So we're still seeing quite a few retailers report. I wanted to show you the chart of a small cap name that is moving up in volume. Had a good day on Monday, and I'm going to go back to a weekly chart. I've just put up a chart for Middleby, MIDD, and this is a company that makes kitchen equipment for hotels and restaurants and other food service industry customers. And this actually was a leader a few years back. I know I did actually own this a while ago. I do not currently. It actually fell off my radar screen for quite some time, as a number of stocks did, of course, back in that 2008-2009 correction. And then it took a while to work its way back. Now, just taking a look at this chart, let's just examine this for a minute. I'll show you some of the things that I like about this. You do notice that it fell into a consolidation back with the general market in the second half of 2011. And, we've seen over and over again a number of stocks that did that. Nothing unusual there. What's nice about this one, you notice the lows of this consolidation, I'm indicating it on Tiger TV, undercut the lows of the prior consolidation. That can frequently be a good thing because the selling can be the pause that refreshes. And while you're seeing a stock going down, you think, oh my goodness, it's just breaking down out of here. There's just no hope. And then, quietly, while it's out of the limelight, you do see this thing begin to rally. You did have this bullish cross of the shorter term 10-week line crossing above the 40-week line. Let's see, that would have been back in December, so that happened. And you do see nice support above that 10-week line. Little pullback here. But, of course, this was, I'm indicating last week, along with the market. We did see a pullback last week. And then nice action this week following that earnings report. I think what you might have seen here, too, on Middleby was some selling ahead of that report. And that's something that I often caution about as well with some of these smaller names that can tend to be a little more volatile. And as I've said before on the show, you can also see that in some of the larger cap names. Hewlett-Packard and Dell were a couple of the names that had big declines on some disappointing earnings reports. So unless you have quite a big cushion in the stock, something that you've owned for quite some time, and you really do have some nice gains and you can afford to sit through some kind of pullback, it is often a good idea to either pare back on your position or sell ahead of the earnings. You can always get back in. In this case, it would have offered an easy chance to get back in this particular case. So that's an interesting one that's back on my radar now. Had fallen off for quite some time. And I'm kind of liking what I see on this particular chart right now. Some decent estimates ahead on this one. And, of course, the estimates can be wrong. They can be wrong to the downside as much as they can be wrong to the upside. So it's not always the case necessarily that Wall Street is overestimating. But they do just show you a little snapshot of some of the institutional confidence in a name at any given time. Okay, let's move on here. I want to show you another chart. You might have seen this in the news this morning. This is Midas Muffler. And this was acquired this morning. Very small deal, only $173 million. So that tells you something. It actually was taken private. It was acquired by a privately held company, a Florida-based company that sells tires to retailers. So I believe the price they paid was $11.50 a share, so obviously a premium over Monday's closing price. So you see what Midas is doing here, and I got to be honest, this is not really a stock that ever interested me too much. It just really was a laggard when compared to others in the auto parts, auto repair industry space. So this one never really did catch my attention, but it is interesting to see, just kind of on the heels, you had Pep Boys was taken private recently. Let me see if that chart is still on here. Yeah, it is. Okay, PBY. So there, you can see I'm showing a weekly chart on Tiger TV of Pep Boys, another well-known car repair chain, and this was also a small cap, and you can see here that typical trading pattern that you see when a stock, when a company is acquired and the stock is out of play. It just kind of holds there prior to the deal being approved and the shares officially going to the shares of the acquiring company's holders. So just kind of interesting that you had Pet Boys, now you have Midas, so little M&A activity among small caps in that particular space. But let me show you a more interesting stock. This is why Midas was never really on my screen. Monroe has actually been, that's another small cap muffler repair shop. This one has been a much better leader, much better price leader, has shown better earnings growth. And that does tend to, in many of these cases, does tend to spur some institutional buying. So that is what happened in the case of Monroe Muffler Brake. Yeah, that's the official name of the company, I believe, Monroe Muffler Brake. Just call it Monroe. So getting nice support here at its 10-week line. This could be a constructive little pullback that we're seeing right here. Could offer a buy opportunity. What you'd like to see, though, so far, it's still on the downtrend. It's working on its 4th week in a row of downside trade. Even though technically you could say that it's in buy range, I would really like to wait to see some upside trade at that 10-week line to get some support there and the stock to begin a rebound. So that way you know this downtrend really appears to be ending and buyers are coming in again. As of now, you can see down here on the volume, you really are not seeing buyers yet coming into Monroe in this particular little area of consolidation. So I would not consider this buyable at the moment, but nonetheless, it has been one of the better small cap leaders in that space. And, you know, of course, you've got other larger companies that have performed well. Advance Auto, O'Reilly, AutoZone has done well in recent months. In fact, let's just take a look at that one here. I know this is a larger company, an S&P 500 component, obviously, but yeah, so this one has been a leader as well. So that's just by way of telling you why Midas has not really gotten my attention, but I did think that deal was kind of interesting today. Let's take a look at another. I see somebody put a note there in the Tiger Den about private equity money looking for acquisitions. Right. Yeah, exactly. There really is. There's actually a Japanese company, and this isn't private equity, but it's an acquisition by a Japanese company of Zoll Medical. ZOLL is the ticker on that. Let me pull this up here. Okay, so Zoll Medical is a company, and I believe I just talked about it last week on the show, or maybe when I was sitting in for Tom last week. Oh, and by the way, I will be hosting Tom's show. I'm very honored that he's asked me to be a guest host again this afternoon in the second hour of his show, so really looking forward to that. Please tune in. Join me for that, and we'll talk about some more small caps, some of the news of the day, any of the results from this Fed announcement that is not expected to reveal too much today. And I think looks like Uncle Ben may be shutting down his printing press. Okay, we'll come back. We'll look at Zoll after this break here. Give a call. I'm at 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Back here, next segment of the Small Cap Roundup. I'm Kate Stalter. I'm your host in this hour. So before the break, we were taking a look at a stock that we've actually been tracking for the last week or two, maybe. And I've personally been tracking it for a little bit longer than that here on the Small Cap Roundup. This is Zoll, Z-O-L-L, and the company makes cardio resuscitation gear. And this was acquired, it was announced yesterday that it was acquired by a Japanese company. And, you know, just coming back to the comment, I believe it was Ken who made in the Tiger Den a few minutes ago, that there's a lot of private equity money looking for deals. There's also a lot of companies that have cash available. They want to make some acquisitions. It's a great way to grow through acquisition rather than organically. And a Japanese company, Asahi Kasei. Maybe I said that wrong. I don't know. If any of you speak Japanese, you can correct me there in the Tiger Den. But that company said it would acquire Zoll at a cash deal worth, let me see here, about $2.2 billion, $93 per share. And basically what that does is it allows the Japanese company to expand into some global markets. So seems like a smart move on their part. Now, Zoll had already been a price leader. It was up about 19% already this year prior to that. And I'm showing you on a weekly chart there on the Tiger Den how it does tend to jump higher. You can kind of, actually, let me go back. I'm going to show it on a daily chart. It'll be a little more clear. And there you can see, if you look real carefully, you can see those kind of two little dots there close together, that's the reflection of how the chart looks after an acquisition is announced. Okay, so, I often comment that many of these smaller companies in the medical space and in many other industries really are ripe for acquisition, but you don't want to be buying the stock based on that. You just want to be using traditional price and volume metrics on the chart. And that's what Zoll was showing. Zoll was actually showing some terrific chart action, had offered some buy opportunities well ahead of the acquisition target, and you find that actually happens. So let's take a look at another one. I mentioned early on that you get some, we're a little bit in the oddball part of earnings season right now. I put up a chart. The ticker is FRAN, F-R-A-N. And this is kind of a little-known company. A lot of folks may not be aware of this particular one. It's called Francesca's Holdings. It's a women's clothing store, and they are based, in Houston, Texas. Small cap, market cap of about $1.1 billion. Some decent liquidity, about 420,000 shares a day that move on average. Now, this company reports after the bell. It went public, back in July of 2011, so it's less than a year on the public markets. And I like IPOs. They offer some terrific potential. They're frequently among some of the market's best gainers. And this company and its chart are showing some interesting elements right now. Back when it first went public last summer, it went public at 17. It rallied as high as 29.75 the week after its IPO. Not unusual to see some flipping at that point. Also, don't forget, that was late July, right around the time when the market began to turn over. So this company went public right before that all began to occur. So at this juncture, what I would be looking for, you notice there was a high price. Actually, let's see here. I'm going to put this up on a monthly chart. I'm going to see how this looks. Might look a little bit funky there. But we have a high of, no, I'm not going to be able to get it on there on this particular chart. Okay, yeah, I am. 25.71 was the high price, 25, let's see, from back in November. So you're looking for a high maybe between 25 and 26. That's where I'd like to see this stock be able to rally back to before I would get interested again as some kind of buy candidate. So it does appear to be on its way, although I, again, notice the volume here on a weekly basis, below average, not ideal, but let's see how it acts after the earnings report today. And that we can come back and take a look at this on Thursday's show, because we may see some either sharp upside trade or some sharp downside trade. Not unusual to see either one, but this is one that I'm continuing to track. And I was talking about the estimates on some of these, double-digit earnings expected for the next 2 years. So, and again, a lot of these IPOs do tend to show some strong gains. They're new to the market. Management has some good ideas. And don't forget, clothing retailers, in particular, have been some of the best leaders in the past year or so or more. Okay. Hang on, we're going to break, and we'll come back and be joined by Mark Courtney of CheckTheMarkets.com. You don't want to miss that. He's always got a lot of great ideas.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfn.com and sign up today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back to the second half of our Small Cap Roundup today. I'm your host, Kate Stalter. Now, today we have a special treat for you. One of my favorite guests from this young show, the Small Cap Roundup. We've been around for a couple months now. One of my favorite guests has been Mark Courtney of checkthemarkets.com, and I really enjoyed our last conversation when he had a lot of ideas about trends in the market, stocks to look at, what maybe some developments in the small cap world and beyond that small cap traders should be eyeing. And I wanted Mark to come back on the show since it's been a couple months, tell us what he's seeing. So Mark, welcome back. Glad to have you here today.
It's a pleasure being back with you, Kate. Yeah, it's exciting times right now, and yet it's kind of surprising how many people have their eyes off of small caps. I write some articles for Seeking Alpha, and I was looking at the numbers of the last 5 articles or 6 articles that I posted, and the one that I posted on 5 small cap dividend-paying stocks that are screened for upside potential had the smallest number of readers. And again, I'm a bit of a contrarian, so that kind of tells me that, people are watching the larger, better-known names, and the smaller names are running right underneath the radar screen.
What do you think that's about? Because I know people did get scared, a week or two back about what was happening in the Russell 2000 when it was declining ahead of the larger indexes. Do you think there was anything like that, or some other reason?
Well, that's it, and I think still people are recovering from the huge sell-off in both the small and mid-caps back in the last quarter of 2011. I think there's some people who got burned, and some of the loss selling at the end of 2011 caused some dramatic plunges. But yet, on the flip side, and the thing that I think I and a lot of investors are just waking up to more, is that if you're really going to seek great upside potential, you've got to look at the next, Freeport McMoRan, the next Newmont Mining. Some of them still have good growth. Freeport FCX is a great large cap example, as well as Rio Tinto, who these companies are huge international conglomerates who have not participated a whole lot in this run-up in precious metals and commodities. But, it's funny. I was looking at the silver index as represented by the Global X Silver Miners ETF, which is symbol SIL. It's comprised of a basket of about 31 primary silver producers, and silver's been staying up above $30. It's up close to 34 or 5 right now, and yet silver stocks have lagged silver. And normally speaking, when the underlying product or commodity is doing well and staying above its 200-day moving average and so on, that it's a good opportunity to make some money. And I was also checking on which of the silver producers, there's some famous names out there like Hecla and symbol HL, and Coeur d'Alene, symbol CDE, and even Silver Standard, SSRI, and I thought, well, which one has done the best? Which one has outperformed? And looking at the charts, in a little-known company named Endeavor Silver is the top-performing silver stock so far in 2012. So,
Mark, is this one Toronto traded, Endeavor?
No, it actually trades here in the U.S. on the New York under the symbol EXK.
I got it.
As in Karen, EXK. And they are they've been around quite a long time. Their chairman and CEO, Brad Cook, is a 35-year experienced person in this game, and he formed Endeavor in 2003. The company has 2 producing silver mines in Mexico, and they have a small reserve base, only about 13.5 million ounces, but it's got some operations going on, and 2 of those are located near Durango and one in Guanajuato, which is Guanajuato State is a site where something like 1.5 billion ounces of silver has already been mined, and there's resource reports saying that there are quite a bit more. So the upside with Endeavor is still there, and Endeavor's not cheap. If you look at a chart of where it's been over the last 52 weeks, it's towards its 52-week high, but nevertheless, that's because of the potential. That's because that they keep on coming up with new finds and deeper silver ore streaks that they have come up with. And the projected earnings going forward, they're selling at less than 16 times earnings. So they're a profitable producing small cap silver company that's, I'm being told, is considering putting on a dividend, and that's one of the new popular ways to get people to invest in silver producers. A lot of people have heard that Silver Wheaton, for instance, SLW, which is really a silver streaming company, not a producer, but that they're paying a dividend that's sort of tagged to the movement of the price of silver. And one of the big movers today in the silver sector is Hecla, which is a good example of why people are very, very skittish about getting into small cap companies in general, not just in the precious metals area. Here's a company that selling at 9.5 times earnings and pays at 1% minimal dividend. It could raise its dividend if silver prices go up, and they're selling it about 8.5 times forward earnings. But every time this particular stock gets up around $6 or $7, they might have problems at their number one producing mine, which is in Idaho, and or the Environmental Protection Agency might put part of the mine on a shutdown for review, and it gets bad news every now and then. And I think it might also be the answer to another question that is asked is, why are some of these small caps so volatile? And that's because some of them get shorted, and it seems like some traders are playing with some of these stocks, and they'll short them based on anticipated or just recently released bad news. But Hecla is a great example of a company with a market cap of about $1.4 billion. So it's not quite what we call a small company. Now, Endeavor, when you look at its market cap, I think with $854 million market cap and average daily volume almost 1.4 million shares, I think that is one that if they have a significant find at their major mines, the stock could pop 20, 30, 40% in the course of a couple of weeks. And that's the kind of companies that I think are being not given their due, when it comes to upside potential.
Now, I pulled up this chart from Endeavor, and I was looking at this before when you were talking about it, and I could see why technically it didn't yet pop up on my screens, because it's still kind of struggling. I see where it hit resistance maybe between 12 and 13 a couple of times last year, and it's been kind of struggling beneath that. But fundamentally, I mean, you're absolutely right. This thing is just a juggernaut fundamentally, and as you said, terrific estimates expected. Just kind of glancing at this chart, Mark, to me, it has the feel of something that has a weight on it. Like there's something preventing these shares from rallying. They're just kind of trending. Right now, they're below their 40-week moving average, but they've kind of been hovering, kind of dancing around their 10-week and 40-week lines. Just remind us, what would you say is weighing down on these shares at this point?
Well, it's a news-driven company, and so when they get more information, like a market wire that came out last Thursday about some of the research that has been done on Endeavor and Coeur d'Alene mines, will sometimes cause it to pop. And today it's up 1.3% on fundamentals, on the reality that both gold and silver might do well. Gold and silver has been kind of in a narrow range as well. I think gold is down below 1,700 right now, and silver's at last I checked 33.49. But getting back to your question, Endeavor tends to get shorted when it gets up above $12.50. I don't know who's doing it, but there's evidently some large short positions that are put on, and its put-to-call ratio goes more on the put side, and then the next thing you know, it will drop. Now, It's kind of on the low side of its 52-week range right now, Kate, and I would think if anybody wanted to enter this, it wouldn't be bad at all to wait and see if it kind of tests its downside range. Mm-hmm. And I haven't looked at the Bollinger Bands, but if someone could get it down towards the lower end of the Bollinger Band, and I'm guessing somewhere in the $9 range. In fact, the research I was doing on it just recently seemed to me that it on the price it had gone down to the $9 range in December. I mean, it touched $9. Last October, it went down as low as almost $8. Mm-hmm. So I'm not sure if the stock dips to either level again. I at least not right now. This is the season, Kate, when gold and silver mining companies will tend to top out, and traditionally that happens right into and through April.
Okay.
And the QE3 talk and the Operation Twist talk about what the Fed's going to do. There's another kind of wild card in all this, and you hear it a lot of these the last week, and that is, what's China's growth rate going to be, and will China lower their interest rates? Mm-hmm. I was told by an analyst yesterday that right now China isn't going to lower its interest rate anytime soon, but they're decreasing the number of offerings that they're making, the debt offerings and bond offerings, and they're trying to hold down and suppress the supply of debt instruments, which also tends to cause interest rates to go down. So it's kind of a backdoor way of lowering interest rates and making monetary policy more accommodative. If China continues that way and eventually, I think the Fed is meeting as we speak. In fact, today is a Fed meeting. So
yes,
if the Fed comes out and says, "Look, we're concerned about the economy and we need to be accommodative," and mentions anything that sounds QE3 style, we might see the whole sector, both in the large, mid, and small cap sectors of precious metals, just pop right up there. But this one, I think I would buy on pullbacks. Okay. And watch it and get used to its movement before I stick my finger in the water or my toes.
And we've got about a minute left here, Mark. I mean, this segment has just flown by. It's been great speaking with you. Great ideas here today. I know you were talking about China, and it did seem that in recent weeks there was some econ data out of China that has been indicating some economic slowdowns, and that seemed to also put some scares into the commodities market as well. Do you agree?
It definitely did. It just happened the day of and the day after they came out. Everybody's used to China's growth rate being at about 8 to 8.5%, and I think what the Chinese central bank is trying to do is lower expectations. So they're telling people now that they're only going to grow by 6.5%.
Right. Which we'd take gladly in this country.
Wouldn't that be nice?
Right.
Yeah,
that's a nice problem to have.
So
hey, Mark.
That kind of thing has suppressed the enthusiasm.
Right.
But as people have reinvested it, and I just mentioned it in an article that I posted.
We know what? We got to go. You want to stick around through the break? You can come back and wrap up that thought if you want.
I'll be here.
Okay. Hang on, everybody. We'll be back with Mark Courtney right after this break.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Final segment of today's Small Cap Roundup, and we are joined again on this part of the break. Coming back, we're joined by Mark Courtney. And Mark, we were talking about China, and what I kind of was finding interesting about what you were saying, and I wanted you to finish your point. We have about a minute here to do that, about a minute and a half or so. But, you know, we had a period of time there a while back when China was driving a lot of U.S. equities trade. Then we went through that long time when it was Europe. And then it seemed like China resurfaced again as having more of an influence on the U.S. equities market. So tell us what's going on there. What are some of the developments that you were discussing?
Well, you know, China's had inflation, and they certainly, like the rest of us, they've had commodity inflation as well as real estate inflation. And in previous years, China's had a gross domestic product target growth rate of 8 to 9.2%. And I was looking at the break at what the average consensus for 2012 is, and it's between 6.5% and 7.5%, which, like you and I were saying, we'd love to have that problem. That's in the United States. That's
right.
A reduction. But China is a huge consumer, Kate, of both gold and silver. And so the reaction, the thought was, well, maybe they won't be needing as much, or maybe their monetary policy won't be accommodative. And nothing could be farther from the truth. China and India are going to be driving gold and silver prices going forward, and the demand in those two countries has not in any way abated. And I'll tell you one thing. I was looking during the break at a company called Silver Corp Metals, symbol S, V as in Victor, M as in Mark, and there's a great example of how to play confusion in a topic, China's growth rate and China's impact on precious metals. Well, Silver Corp, which is headquartered in Vancouver and traded here on the New York Stock Exchange, they get a lot of their silver production out of China, and they sell it as quickly or before they even get it out of the ground. They have lots of clients, including silver streaming companies like Silver Wheaton, and they pay a 1.4% dividend to boot. They're selling it 14 times forward earnings. These are examples of smaller companies that are being held back by rumor and by confusion, and that usually spells a sweet opportunity.
Well, Mark, thank you so much. You've just given us a great perspective today and some ideas for some stocks to look at, and kind of just putting this in a bigger picture. And I really appreciate that. Thank you so much for coming on the show. Going to have you back here again sometime.
It's always a pleasure, and I look forward to it.
All right. Thanks again. You're
welcome. Take care. Bye-bye.
You too. So that was Mark Courtney of checkthemarkets.com. A lot of interesting info you will find on his website. Definitely recommend checking that out. Let's see here. We have just a little bit of time left before I am out of here in today's Small Cap Roundup. Let's see. Just wanted to show you a couple other things that I had on my radar screen that I was taking a look at. Putting a chart up here very quickly for one that we've talked about recently, InvenSense, INVN, another one of these IPOs. I mentioned that I do like to watch the IPOs. This is a stock that is getting some good support above its key moving average, zooming higher to new highs, out of buy range right now, I think, but good action here, good upside trade, a good one to be watching. So that is what we're looking at here, and I'm Kate Stalter. This is the Small Cap Roundup, and it's been great being with you again today. As I mentioned, I will be hosting Tom's show, guest hosting. He's asked me, and I'm delighted to be able to sit in this afternoon in the second hour of the show. So it's 5 p.m. Eastern, and I will be talking to you later on today. Have a great day until then.